Hi everyone, welcome back to our channel. In the most recent announcement of the official cash rate, the Reserve Bank of New Zealand maintained it at 5.5% without further increases. However, other banks did not follow the suit and continue to raise the interest rate. Most people are puzzled about the reasons behind this and are wondering about the future trend of interest rate and how to fix them. The Reserve Bank of New Zealand is currently keeping the official cash rate at 5.5%, refraining from the further interest rate hikes. Although the current inflation rates remain high at 6%, the Reserve Bank believes that the previous 12 consecutive rate hikes have had some effect. As a result, they decided to pause the further rate increases and closely monitor the future economic trends. However, the current pause in rate hikes by the Reserve Bank does not mean that the OCR has reached its peaks. Whether there will be further rate hikes in the coming months depends on the changes in the inflation rates and other economic factors. Most economists predict that the OCR of 5.5% is likely to remain until the middle of next year, followed by the rate cut from the second half of 2024. This is good news for those who currently have the loan, as they can finally catch some breath. Many people are worried that their loans at the higher interest rate may become unaffordable, and even considering selling their properties. Although the OCR has been stable in the past 2 months, you may be curious why the banks have recently raised their loan interest rate. What will be the future trend of interest rate, and how should you choose a fixed interest rate? While the Reserve Bank of OCR does influence the loan interest rate, it's primarily affecting the floating and short-term loans interest rate. Other factors influencing the loan interest rate include the New Zealand bank's borrowing costs from overseas and their profit margins. Although the OCR has remained unchanged since May, the borrowing costs for the banks from overseas have increased. Additionally, the profit margin for banks have been continued declining over the past year or two. For example, in 2021, the profit margin for banks was around 2% or higher, but now it is below 1.5%. In other words, even if the OCR remains unchanged, if the banks want to increase their profit margin, or if borrowing costs from overseas continue to rise, the mortgage interest offered by the banks will still increase. This explains why the loans interest rate have gone up despite the OCR remains unchanged. Therefore, the possibility of interest rate continue to rise cannot be ruled out, and we can only say that the current interest rates are close to their peak. For most people with home loans in the numbers of years, they have already seen the interest rate rise to above 6%, while only a few borrowers have not been experienced a significant increase in interest rate. We all hope that when it comes time to fix the next loan, the interest rate will have started to decline. Despite the enormous pressure faced now, if you can endure this stage, things will feel much easier later on. Let's all keep going. So, how about how to fix the interest rates? If you are currently about to sign a new loan contract or need to refix the interest rate for your loan, I personally believe that considering a 18 months or 2 years loan term is a relatively prudent decision. If you choose a fixed term that is too short, you may still be in a high interest rate cycle when it comes to the refix, which will increase your overall loan interest costs. On the other hand, if you choose a fixed term that is too long, such as 3 to 5 years, although it may seem like it's a good idea now with the lower interest rate and stability, in the long term, the actual average interest cost over the next few years may be much lower than the fixed interest rate for 3 to 5 years right now. If you decided to terminate the contract early at that time, you may face a substantial termination fees. So choosing an overly long fixed term is not recommended. Considering the current interest rate situation and further interest rate trend, an 18 months or 2 years fixed rate is relatively ideal choice, as it strikes a balance between interest rate stability and consideration of long-term interest rate costs. As mentioned earlier, many people currently feel enormous pressure in considering selling their properties. I suggest that if you can be patient and wait until after the election, you may be able to sell your property at a better price. Of course, we have seen some particularly high demand properties being sold at price even higher than the bank valuation, but most properties currently are not selling at ideal prices. For those who are planning to buy a primary residence, I personally recommend acting as early as possible. On one hand, low interest rates are stabilizing, and many people who were previously worried about affording a loan may now have more confidence to enter the market. leading the increase of competition. Secondly, the net migration numbers continue to increase, with more people coming to New Zealand than leaving, which will increase the demand of properties and drive property prices up. Thirdly, many property investors have been in wait-and-see mode over the past 18 months. They wanted to see the election result because the current policy has significantly impacted the investors' cash flow, not only on the interest rate higher, but they cannot be offset by the rental income, resulting in heavy tax burdens. As a result, many investors have been reluctant to take the risk of buying investment properties. However, if the interest deductibility policy is reversed after the election, interest rates stabilize, and many investors will re-enter the real estate market, increasing the competition. In summary, there may be a series of changes in the future property market. If you have plans related to it, I recommend closely monitor the election results and market trend to make more informed decision. Hopefully this video gives you some insight. If you have any question, more than welcome to get in touch with us. We'll see you next time.